Hey folks, welcome back to Macro Crazy, where we help you on your macro trading journey, trying to get you to make more money with better risk management. Okay, big week from a political perspective. U.S. Midterm elections are on Tuesday. The base case that you should be operating with is that Republicans are going to win the House and the Senate, which will lead to a divided government. Our friends over at Morgan Stanley had a note out talking about the elections. Number one, the results could take days because of all the mail-in ballots. So, the market could be left hanging, wondering what's happening. As I mentioned, base case, GOP wins the House and Senate. Markets won't move on that because that's what's expected based on the polls. The sell-off, there could be a sell-off, though, if the Democrats do better than expected. It might be an endorsement of their loose fiscal policies and could invite additional fiscal stimulus. For anyone who remembers what in the aftermath of the 2010 midterm elections, where the GOP gained and there was divided government, it was a complete shit show. Threats of government shutdown, debt ceiling battles resulted in sluggish growth and sluggish recovery. The easiest thing I would look at is yield-sensitive instruments. That obviously includes fixed income. That could include currencies, obviously like dollar. It could also include yield-sensitive stocks like banks. Okay, enough of the election talk. Moving on. You can see on the image, Meta. There's a rumor that Meta is axing thousands of people this week. They've been talking about a hiring freeze and maybe a little bit of pruning, but they're obviously maybe got inspired by Elon Musk over at Twitter, and they're looking to cut dead weight essentially. So we'll have to see if that actually comes to fruition this week. But another sign that the clouds are really darkening in the tech sector. So, I would be short or I would be out there. And any stock that is dependent on the tech sector, like key suppliers, that's something else to consider. Okay, next, Elliott Management, aka I think his name is Paul Singer. I think he's retired now. He's left the company. But anyway, he's talking about potentially hyperinflation and then societal collapse. And not just in the US, it could be around the world in all kinds of places. So he's a smart guy. Who knows what his agenda for putting this out there is. But because he is, I would kind of consider him somewhat of a macro trader, depending on your view, something to pay attention to. Lastly, I did want to talk about this because it's really sad and it's concerning. I know we've heard all about from Joe Biden about the strong as hell economy, but more and more Americans are being forced to sell their blood after working 2-3 jobs to try and be able to buy food. Doesn't sound like an indication of a strong consumer, but who knows? Okay, moving on to key releases for this week. Not too busy. Consumer credit, that might be interesting. We keep hearing consumers strong, but borrowing levels are increasing, specifically credit cards. There's Fed talk this week on Monday, as you can see. Tuesday is election day. Okay, so Tuesday, election day, small business index, not a big number, so I wouldn't worry too much about that. Fed talk on Wednesday and wholesale inventories, revised number. Again, not a big deal. So the story, certainly in the early part of the week, is going to be the elections. If it's expected, Republicans win the House and Senate, then shouldn't be too much turbulence. But I would look to the yields to maybe trade there. Otherwise, if the Democrats do better than expected, there could be volatility.